Here we have the current stock market analysis for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders can find this information more easily on the platform. So as we can see here, we are looking at the 1 hour price chart. Each candle on this time frame represents a 1 hour trading period. And as we can see here, share prices have now gapped lower to the downside to start today's trading session. So what has occurred here is a fairly substantial price gap. And then as we can see, the prior support zone that we have been watching for this stock was coming in right at $6.20. And as you can see, this is exactly where share prices managed to find some support. So this does show that these prior price projections were accurate. This is ultimately the price level that was able to contain share prices to the downside. Of course, this does not necessarily mean that this will be the end of these declines. Um, you could start to see share prices bounce from here. But the fact that we are already gapping lower here is a significant warning signal. And this does sort of post the present the stock in a bit more of a bearish light, more in ways that have been suggested in prior videos. So, what I have been saying here for this stock is that, we're likely to start to experience some downside here. I mean, I understand that people that are long this stock don't want to hear that, and they don't want to see share prices move in the other direction. That's, I suppose, understandable, but it's also a bit irrational because it does not. It fails to understand that share prices do move in two directions, and then when we start to see extreme price movements like this, the likelihood that share prices will need to retrace themselves and pull back, that likelihood grows. It increases. So it doesn't become less likely, it becomes more likely. So, it is telling here that we did find support right in this important area. This will be a critical price movement here going forward because, there are a couple of different things that can happen at this point. We could start to see, the most bullish scenario, which I suppose is what people want to hear, would be that share prices do bounce from here. And possibly we do, this is a very strong support zone. I explained why in the prior video. There are three different reasons it's important. I can sort of go over those quickly here. One was this prior resistance high comes in contact with this area, and we would expect prior resistance zones to start to act as support once they're tested from the top side. In addition to that, we also have the 38.2% Fibonacci retracement zone coming right into contact with this area. And then we also have this rising purple line here, which is the 100-hour exponential moving average. So, these might not come in direct contact, but as we can see, these areas here and these technical signals are really close enough to give us a convergence of chart formations here in one place. And this is really what suggested that share prices would ultimately fall to this 620 area before we could possibly see any attempt at a bounce higher. So all of this has turned out to be true so far. So, the real question from here is, where will we be heading next? Will we start to bounce higher from here and then find some actual support in this area? Or do we break this area and then see a significant move to the downside? So either of these situations are possible. To get some sort of evidence of what is most likely, we can point to the indicator readings themselves. And we can see here that, the balance of the evidence is currently bearish. In the prior video, I was pointing to this indicator reading as being incredibly important, a highly important price movement here for a few different reasons. One was that this has now been tested on 3 separate occasions. It was possible that we could have seen a bounce here, but I thought that the most likely outcome was that share prices started to fall, started to pull back here, and then this momentum reading starts to break lower. Now, this is highly significant here because what this tells us is that this current trending move, this momentum indication here, this positive condition in the momentum reading has now completed itself. It has run its course and is no longer likely to continue influencing share prices. Well, why is that important? If we take a look at where that momentum reading began, it comes right into contact with this major low coming in at roughly $3.65. So that is really the same price movement here. This is all the same momentum reading that generated all of this upside price movement. So what this tells us now is that trend is over. I think there are some fundamental reasons which also help to support this, this sort of outlook here, because I think that a lot of this upside price movement has been based on stimulus packages in China, and sort of an attempt to repatriate a lot of foreign investment back into China. This encouragement for Chinese citizens to invest in their own markets rather than in other markets. There's a large percentage of the population globally that considers China to be completely uninvestable, and there are legitimate reasons for that. For example, you can look at Alibaba as one key example. That CEO Jack Ma, he just completely disappeared. He was completely removed. He built an amazing company. His life story is very interesting. He's an interesting guy, and he said some things that were critical of the government, and we never hear from him again. He does seem to have reappeared, I guess, but he's certainly not the popular figure that he used to be, and we certainly don't hear many comments from him now. So it's reasons like that. You start to see things like that. So if a CEO starts to criticize the Chinese government, you start to see strange things going on in the company. Suddenly now Jack Ma is not the CEO anymore, and we really don't hear from him anymore. So that's a lot of unpredictability, and that's a lot of that explains a lot of the reasoning behind this characterization of the Chinese stock market as being uninvestable. So, there are real risks there, and China is trying to repatriate a lot of its own investment money from its citizens back into those markets. So, I do think that a lot of the upside here was generated by that activity. But if the stimulus packages from China have now completed themselves, if we're not going to be seeing those anymore, all of this is coinciding in a technical fashion as well. We're starting to see this momentum reading that's completing itself as well. Share prices have now broken through this momentum indicator. And currently, we have fallen right back into the support zone that we were watching now for several videos. I've brought up this 620 area. So, going forward here, just to maintain the outlook here, the positive scenario would be that we see share prices bounce from here, possibly refill this price gap to the top side, and then possibly even break through resistance at $6.90. I don't really expect that to be the case. My bias here at the moment would be for a downside break at $6.20. And then I think that we would probably, at the very least, be looking at probably another full dollar to the downside. Although this 200-hour exponential moving average has now run into the 50% Fibonacci retracement, where before it was at the 61.8% Fibonacci retracement. So if this area does turn out to be the main support zone, that area would actually come in at 570, which was actually a prior area of resistance as well. So that's another area that could be significant here going forward. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.